Good afternoon, Mike Estrada with National Home Lending, the in-house mortgage person here at Vision Realty. Today we want to talk a little bit about VA loans and how to get your people approved, or what they need to be approved. So with any loan, always you'll be looking at three main factors. Number one, credit. Number two, income. Number three, assets. So with a VA loan, and we now have a couple different lenders that we can take it through, but they're both the same as far as credit goes. You're going to need a 640 credit score. That's it's exactly the same as at FHA. So a 640 credit score is your minimum. More importantly though, again, you have to have that credit history. Now, very similar to FHA again, but you can actually have a VA person eligible after 2 years after a foreclosure, where with an FHA it would be 3 years. So bankruptcy and foreclosure, a little bit different, a little bit more lenient. You can get eligible a little bit quicker. But in saying that, you have to make sure that your buyers have reestablished credit. A lot of times people, when they go through a bankruptcy or foreclosure, they tend to shy away from credit. They don't want to use it. They don't want to get new credit. It's very important that they've done that and that there are still no lingering, nothing is reporting. And always the best way, send them to me. I'll ask them questions and most likely pull a credit report just to kind of see where we're at. Okay, so once we determine they're good with credit, we have to determine the debt to income ratio. Now, the guideline states that you cannot exceed 41%, but in reality you can if you have other strong compensating factors. So you have to take, with a VA loan compared to all other loans, you're going to use what's called a residual income. So basically, the residual income takes net pay, and that's going to be determined by, there's a couple different ways we can do it, but you basically want to look at somebody's pay stubs, see what kind of deductions they have from their pay stub. You determine their net income. Okay, and then to get the residual income, and there's a fact, it's basically this, $1,000 has to be left to be eligible in the state of Michigan doing a VA loan. So you take their gross income, you subtract all their deductions from their pay stub, you determine how much of a house they're buying, and you have to deduct also 14% based on square footage. So if you have a 2,000 square foot house, you deduct another $280, or 14%, $280. And then, so you keep on deducting. If you have 1,075 left, that's your residual income, and I can do all those calculations. It's complicated, but you'd be surprised, and it's also based on family size and other deductions. But just because somebody was a vet, it's not a slam dunk, it's not a sure thing that they're going to be VA financing eligible. So that's something I can run them through. Look at, always we want to see income and asset documents. So determine the credit's good, ask for the income and assets. Now as far as the assets go, the main thing about VA, you don't need a down payment. So that's pretty enticing to a lot of people to go VA. You're still going to need your closing costs and your prepaids, but no down payment. There is for VA, depending on how many times. So the first time usage, there is an upfront funding fee of 2.15%, and that gets to be financed into the loan. Okay, but if somebody's looking to get into the house for as little as possible, you can still get concessions on a VA. 6% concessions on an FHA, VA is only 4%. Okay, so you cannot exceed 4%. So with the down payment, with no down payment and up to 4% in concessions, do a lot of loans where VA people are bringing very little money. Okay, so I've seen it before where people bring basically nothing to close. So that's one of the main things that you can get done for your VA lenders. Okay, and as far as assets again, always, where is the money coming from? Very important, VA, just like anything else. 60 days of seasoned funds, you have to show bank statements, where the money's coming from. Any kind of large deposits are going to be highly scrutinized. You basically have to paper trail them, show where they came from. That is the biggest part of any loan I find these days. Where is the money coming from? So just in summary, VA, 640 credit score, residual income more than anything else, residual income, and then assets just like any other loan. Show me the money, where's it coming from? Make sure you have good documents. Always available, call me first. Doesn't take much to pre-qualify somebody, probably 15-20 minutes in most cases to make sure that they're good to go VA. That's it. Any questions? As always, give me a call. Always here. Thanks.